And Fed Chair Jerome Powell is testifying before the Senate Banking Committee. He says he expects to see inflation increase this summer because of the Trump administration's tariffs. Meanwhile, a new report shows consumer confidence weakened in June, falling short of expectations. Business reporter Alexis Christoforous is here to break it all down for us. Alexis, let's start with the chairman's testimony, what he's said so far, and where things might be heading in terms of inflation.
Well, Diane, this is day 2 of Powell's testimony before Congress, and his messaging is pretty consistent, saying once again the Fed is content with taking this wait-and-see attitude to see how tariffs impact the economy, whether or not more interest rate cuts are needed. Remember, the last time the Fed cut rates was now about 6 months ago. And once again, Powell said rates probably would have been cut by now based on the hard data if it were not for tariffs. And when we're talking about hard data, we mean things like inflation, which continues to now moderate, the job market, which is still hanging on, but showing signs of slowing down. He said that atmosphere would have been perfect for an interest rate cut, but all of the uncertainty presented by the tariffs are now making that an open question mark. The next time the Fed meets, by the way, the end of July, so we're going to get a few other important pieces of data, including a new jobs report and another inflation report before then.
Alexis, President Trump just called Powell terrible at his NATO press conference. He wants the Fed to cut rates. He's been pushing for that for a long time. How do you think these comments, are experts going to be reading the tea leaves here to say that means no rate cut come July?
You know, President Trump has been pretty consistent with his messaging on this topic as well, resorting to name calling when it comes to Chairman Powell, a person he actually put in that position during his first term. He's called him things like stupid and moron, and has said that Trump, could do the job of Fed chair better than Powell. During his testimony this week, though, Fed Chair Powell reiterated that whatever comes from the White House, it is not going to impact monetary policy. Remember, the Fed was designed and built to be an independent body, not intertwined with the president, the White House, or a government.
Meanwhile, Alexis, global markets and oil prices don't seem to be responding to the tension in the Middle East. Why?
Yeah, it has really been sort of mind-boggling, right? I mean, when we first heard of the unrest there between Israel and Iran, we thought we would see a big drop-off in the stock market, and we thought we'd see oil rally, and we've really just seen the opposite. Some of this is because traders are saying, look, the reality is oil infrastructure has not been impacted by the attacks. And the Strait of Hormuz, which now is sort of part of our vernacular over the past few days, is a really important key passageway where 20% of the world's oil moves. That has not been impacted. If those things were to happen, I think you'd see a much more aggressive reaction on Wall Street. But at least for now, it seems as though the ceasefire between Iran and Israel is holding, and traders are betting that things are going to move in the right direction, and they're pushing stocks higher. In fact, the S&P 500 is a whisper away from a record high. Hard to believe that, Diane, given the geopolitical tensions.
All right, Alexis Christoforous, thank you.